He could come out tomorrow and say, I'm going to put 127,000% tariff on China. And I think markets would go down maybe 1%. Um,
Yeah.
Markets just don't care anymore. I don't care anymore. Any pullback we do see in the markets, maybe it's 2 to 5% over the next few weeks, will be a great buying opportunity. We're going to pull back, we're going to bottom, we're going to U-turn, and the rally is going to continue. Yeah, I think quantum, like humanoid robots, it's becoming a reality, right? Like people kind of throw flying cars, eVTOLs, quantum computing, humanoid robots, self-driving cars. They kind of all throw them into this science fiction bucket, but that
Mm.
bucket is quickly becoming a reality across the board.
Hello and welcome to Being Exponential with Luke Lango, where we'll go over the economy, markets, the technology, lifestyle, all from an exponential perspective. It is July 22nd. I'm your host, Brooke, and let's dive right in. All right, Luke, I want to start today's episode off with robotics, a reoccurring theme in these episodes, and I'm sure they will continue to be. Got a couple of different points here. Looks like Elon recently shared a video of a robot, humanoid robot, feeding them popcorn. And then we have a bunch of videos in China of their new wave of robots. I've seen them holding bags for people shopping. I've seen them playing with kids. And then, we talked about the soccer video. It seems like the robot wave is starting in earnest. How do you feel about that, Luke?
Yeah, I mean, the robots are here, right? I don't think they are coming. I think they have arrived. The Optimus robot at the Tesla diner in Los Angeles to me is a landmark moment. So context, Tesla launched its first ever Tesla diner concept on Santa Monica Boulevard in Hollywood, Los Angeles. What this is essentially a supercharger station that is disguised as a diner. So you have
Mm,
all these superchargers. So the idea is people pull up their Cybertrucks or Model 3s, Model X, Model S, whatever the heck you got. You drive it up, you plug in, you charge. As you're charging, your audio in your car gets synced to it's like a drive-in movie, this giant drive-in movie theater. So you're now listening to this, you're watching this movie as your car is charging. You can order food. People can roller skate out to your car and deliver food, kind of like, old school 1950s diner type stuff. So that's
right,
kind of
right.
a cool nostalgic feel there. But then also you can get out of your car and you can go inside this diner, and it has all the latest Tesla technology, including, most impressively, an Optimus robot. So there's an Optimus robot at this Tesla diner in Los Angeles that is serving popcorn to people. So there's videos of it online. There's like the movie theater popcorn stand, and you ask for popcorn, and it goes over and scoops you out some popcorn, hands it to you, and then waves at you or gives you a thumbs up, kind of switches it up. But to me, this is a landmark moment because this isn't, everything, all the demonstrations we've seen of humanoid robots so far, they're behind closed doors. It's a
Mhm.
video I see online of Optimus in a Tesla factory doing a silly little dance move, or Optimus in a Tesla factory walking a straight line, taking a left, taking a right, or Optimus in a Tesla factory folding clothes, or turning a knob, or doing some kind of mechanical skill like that. Point being, the commonality is in a Tesla factory. It's in a controlled setting. I personally could never go and see that. I can't get into the
Right.
Tesla factory and see Optimus doing that. Optimus, the Tesla diner, is not that. It is fundamentally distinct. It is a humanoid robot in the wild. It is Optimus in a location, a public location, doing a job, scooping popcorn. Simple job, but nonetheless doing a job for customers. Customers can interact with this robot. This is the first ever real world useful public demonstration of Optimus, of a humanoid robot in the United States. To your point, China's already doing this, but for some reason we don't like to pay attention to what's going on in China. We only care about what's going on in the US. Well, this
Of
is the
course.
first time this is happening in the US. Public, real world demonstration of a humanoid robot doing a job, adding value in a commercial public location where you and I can go and see Optimus doing something. To me, that's massive. I think that's huge. I think that really illustrates this idea that, hey, you know what? The robots have arrived. And after seeing that, I haven't been there in person. I want to get out there in person in the next few weeks. Unfortunately, I was just in California. I came back on Sunday. The location opened on Monday afternoon, July 21st at 4:20 p.m. You can guess why it opened at 4:20 p.m.
Right.
Um, so I haven't been there yet. I want to get there in person, but I mean, it's just really, really cool, man. And it illustrates to me that everybody kind of thinks that Elon's projections for how fast Optimus is going to grow. They're pie in the sky projections. He's smoking some 420, and then he comes up with these random projections, right? That's what the public consensus is. But when I
Mhm.
now see Optimus in the real world doing value additive things, all of a sudden I'm like, yeah, you know what? It's very reasonable for them to start selling these robots to other companies in 2026. It's very reasonable for him to start selling these robots to households in 2027, especially when, again, off in China, Unitree is already selling them to households for $20,000 a pop. And Unitree is actually expecting to IPO, or apparently they're preparing, exploring the potential for an IPO in the US market. So all of this stuff is coming together at once, and it really tells me I mean, this is the next big wave of AI. You got to be invested before the wave really shows up and hits the mainstream. And so Tesla, I think that stock's going to pop off with Optimus ramp. But I think a lot of the supply chain is where the real value is going to be unlocked. We've already seen some of it be unlocked with MP Materials. We've talked about that stock a lot in this podcast. Rare earth supply, or rare earths are super critical to humanoid robots. That stock's gone from 20 to about 60 in like 2 or 3 months because it got a big deal with the Pentagon, and then another big deal with Apple. Wouldn't be surprised if they sign a big deal with Tesla as Optimus ramps up. So that's one kind of part of the supply chain. There's other parts, Ambarella, Vision chips. I think NVIDIA is also kind of going to play a big role here. So I think there's just a lot of players, a lot of stocks that are really going to benefit from this robotics wave. And I think you want to be invested in them now, again, before the wave goes mainstream. So I really, really, really like what's going on with the robotics space. I don't think it's some science fiction concept. I think it was a science fiction concept that is now becoming a pervasive reality.
Yeah, definitely. And I gotta say, just purely from a marketing perspective, it was pretty clever because it wasn't like this over the top thing. It was very subtle, especially the location, Santa Monica, California being a cultural hub. It's just, oh, this is the new normal. That, I'm here getting my popcorn from my Tesla robot, and it'll percolate that way. That was a pretty clever move by Tesla.
Yeah, that's the thing. I mean, so the location is great, right? There used to be a Shakey's Pizza there. For anyone that knows LA, Shakey's Pizza was iconic. And they shut down for the Tesla diner to open up. That was in 2022, I think. So yeah, iconic location, the subtle use of the robots. I mean, you're exactly right. That's how these things are going to roll out. It's not like all of a sudden they're going to be everywhere. It's like, okay, they're going to start serving popcorn at some diners. Okay, they're going to start um,
Yeah.
like serving whatever else at other restaurants. They're going to start helping out in retail locations. Like they're going to start being security at malls. Like they're just going to just kind of subtly pop up here and there. And then eventually, it's like when you put, the saying, you put a frog in hot water and it jumps
Hmm.
out, but you put a frog in room temperature water and then you just slowly increase the temperature to boiling and it stays in there. And because you don't really notice the change, right? I think that's what's going to happen with robots. It's not going to be like, day zero, there are no robots. Day one, there are tens of
Right.
thousands of robots everywhere. It's going to be like, okay, a handful arrive every single day, and we're not even going to really notice it all that much until finally you're like, wait, 3, 4 years later, they are everywhere. They are ubiquity. In the meantime, the stocks powering that revolution are going to go absolutely vertical. So that's why I'm really excited about that. I think this is the next wave of AI. And we have a portfolio of stocks just kind of catered exactly to this trend. That's a portfolio I'm really excited about. I think the robotics revolution is going to be massive and have huge investment implications.
Got it. Now, is that portfolio specifically robots or is it AI in general?
I think physical AI, I mean, the portfolio is intended to capture the robotic supply chain. the
Yeah.
humanoid robot supply chain. But when you really dig in, the humanoid robot supply chain shares a lot of similarities, which is the whole physical AI supply chain, because the whole physical AI supply chain is about bringing AI to the edge. And when you bring AI to the edge, the stuff required to do that, it's the same for humanoid robots. A lot of it's the same for humanoid robots as it is for warehouse robots, as it is for burger flipping robots like
Right, right.
Flippy, um, like it is for self-driving cars. So when you bring AI to the edge, the stuff required to do that, it's largely the same across different end applications. And so this is a robotics revolution portfolio. It is a humanoid robot supply chain portfolio, but it lends itself to the whole physical AI movement. Again, a company like Ambarella, ticker AMBA, Vision Chips, that's going to
Mhm.
be very essential for humanoid robots, for warehouse robots, for self-driving cars, for all physical AI applications. Ambarella is at the epicenter of all that. So that's a really cool application there. MP, that's more of just kind of humanoid robots because it's actuators and stuff like that. Unless we get other robots that have actuators, some warehouse robots do, so it could be useful there, but not really in self-driving cars. So that's more of like a robo play, not a whole physical AI play. So again, there's some overlap, not entire overlap, but some overlap between the robo supply chain and the physical AI supply chain. But I think across both of those supply chains, that's where you're going to find the next NVIDIA, the next kind of chip stocks that kind of have a massive uh, value appreciation over the next few uh, months to years.
Gotcha, definitely. We'll definitely touch more on that. But if you are interested in those as a viewer, we're going to put a link down in the description with more information on that. Um, Now, Luke, I want to get on to the next topic here. I want to talk about YouTube. Specifically, I want to talk about how Hollywood is shifting from Hollywood to Silicon Valley. We
Yeah.
mentioned previously Google dropped, VO3, just more AI that is almost unbelievable, or I guess believable in this case, right? Even Netflix has admitted to using some generative AI in their movies, TV shows.
Hmm.
But specifically here, I want to talk about a article I read recently. It was called "How YouTube Won the Battle for TV Viewers," and that's to say that on average, people that used to watch TV are now watching YouTube. Even the boomer age, that might have something to do with YouTube ads. People have gotten accustomed to, ads in their programming, and YouTube still has that, whereas streaming doesn't. But YouTube mentioned, using Gen AI and all this data, but it hasn't come to the forefront yet. What do you make of this news? What do you make of YouTube? What do you make of AI in the film industry?
Yeah, I think all film production, I think all content creation will eventually be done by AI in like probably 5 to 10 years. Like I think it's gonna happen pretty rapidly. And I think
That's
YouTube is the tip of the spear there. YouTube is number one in my opinion because they have all the assets you would need to become the new Hollywood. They have the distribution. What, they
mhm,
got 2 billion people that watch YouTube every single month, I think, or something like that. So they have the distribution, the apps on everybody's phone. They have the data because all of these people use YouTube and watch stuff on YouTube. They know what you like to watch. They know what certain cohorts like to watch. They know what males aged 25 to 35 in Phoenix, Arizona like to watch. They know, they can slice it all up in ways
right.
that nobody else can really. So they have that massive distribution advantage. They have that massive data advantage. And then because of that massive data advantage, couple it with Google's massive data advantage because Alphabet owns YouTube and Google has all that search data. They have all this language data, all this text data, and that's how they've been able to create VO3 and other Gen AI tools, video generation tools. You put all that together and it's like, yeah, this is a company that has the AI, the data, and the distribution, not to mention the production know-how to really create fantastic content, whether it's 30-second clips, YouTube Shorts, or whether it's like, a traditional YouTube show, maybe 30 minutes or so, 15 minutes, or a full length, film, 2 hours, 3 hours. YouTube can do it all, in my opinion. The only one that can really compete with them is Netflix, because Netflix has distribution, Netflix has data. I just don't know if Netflix has the AI capabilities that Google does have, right? That the entire
Right.
Alphabet ecosystem does have. So I think Netflix can piggyback off of, and they can build Gen AI models on top of ChatGPT and other things like that. They certainly have the money and the talent, the resources to do that. So I think Netflix can compete here. But I think at the end of the day, it's going to be all the content we essentially consume is going to be Netflix and YouTube. Apple, if they could make a play here, I think they need to make a really splashy acquisition. They need to go out and buy Perplexity. They need to go out and buy somebody to really juice their AI stuff. If they do that, then I think they can have a run in the content game. F1 has been a fabulous hit. No AI in that. But that shows that Apple can be a content powerhouse. So I think if they make a splashy AI move, then they could become a player in here too. But as far as like Comcast and all these other shows, I mean, listen, Love Island, great. Seriously though, great. Like that reality TV show has gone viral. Everybody's watching it. I think that's Comcast because it's Peacock. The rights are all kind of confusing because there's like Love Island UK and USA, and they're being purchased by different things. But anyways, trashy reality TV is the only thing keeping the traditional players alive. I don't know how much longer that lasts. Like I understand that humans like to connect with the what am I going to call it, the dysfunctional side of trashy reality TV, right? It's like the dysfunctional side of people, and like it makes you feel kind of
Mhm.
okay about your dysfunctional side as well. Like I
Like
get
watching a
that.
train wreck, right?
Yeah, exactly. And it's like, you know what, my train wreck's not that bad after all, right?
Yeah.
It makes you feel a little better about yourself. But the fact that trashy reality TV is the only thing, in my opinion, keeping legacy Hollywood alive, that's not a wide moat. That's not something to count on for a long time. So I do think we are shifting from Hollywood to Silicon Valley. I think being short the legacy players in the space may end up being a very profitable move in the long term. And I think being long the new content creators, Google, GOOGL, stock ticker,
Mm.
Netflix, NFLX. I think that Meta can make a play here, META. I think that is a good stock for this. Again, they have data, they have distribution, and they have AI. They're just not traditionally a content player, but with data distribution and AI, they can become one. Apple could make a play here as well. And I think Spotify is really interesting because I don't think this is just going to be video stuff. I think audio stuff
Right.
too. I think AI music is definitely going to become a thing. AI podcasts are definitely going to become a thing. We're going to be out of a job soon, Brooke. That all of these, I think that Spotify has a massive leg up there as well. So I think when you kind of put it all together, it's like, yes, tech is now media. So legacy media, short, new tech media, go long. That's the play for me. That's the investment implication of this tech takeover of Hollywood, the Silicon Valley takeover of Hollywood, which is being, it was already happening before just because of distribution. And like, my kids, for example, they watch YouTube, they watch Netflix, they watch Disney Plus. That's about it.
That's about it,
They,
right?
they 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 don't know what cable TV is. They've never turned on. They don't know what to change the channel. You say, "Hey, change the channel." They're like, "What?
Right.
What does changing the channel mean? Do you mean
What is a
go to the next
channel?
episode?" Like they
Yeah.
don't know what that means. So that stuff's all dead just because of the legacy kind of consumption shifts, generational consumption shifts rather. But AI is accelerating all this change, and I think it's put the shot clock is winding down for legacy media. The one that I think may have an advantage here in the legacy space is Disney. I think Disney has a big enough content moat. Um, can Netflix create great animated content? Yes, and they have. And can they use AI to make it better? Yes. Can Google do the same thing? Yes. And they have their own princesses and princes and all that stuff? Yes, absolutely. But they don't own parks. They don't own retail stores. They don't
Right.
have the legacy content, right? Like all of that stuff matters for Disney I don't think it matters for, like MGM or any of these other, Fox. I don't think it matters for those. No one gives a crap about the legacy content from those organizations. There is Universal Studios in terms of a park in LA, but that's not Disneyland. That's not Disney World. Those hit different because it's a family venture. So I think Disney is safe from this. But outside of that, I don't think anyone in legacy media is safe.
Yeah, I mean, I wouldn't be doing myself a service if I, devil's advocate. I have a personal stake in the fact that production is going almost all AI, but I would want to counter that there does seem to be a return of the movie itself. Like, we saw F1, it did gangbusters over what, 300 million, maybe 200 million, in a movie by Apple. And then if we think about companies, IMAX, the company itself has been doing amazing. And I think that's probably due to the fact that people do want to go back to the theaters because, you want a separation from your viewing experience at home because you can throw on any movie you want. So you want to have a different experience when you go to the theaters. So I think there is a case for a little bit of longevity in movies specifically. I do agree with TV in general and streaming. Yeah, I have watched Love Island. It does seem like that is the general direction, but I do think there will be a steady or Hollywood, maybe not as big as it was, but it should remain something because we all
But
love a movie.
just because the demand remains durable. So your argument there was the demand for movies is going to remain durable. I agree with that. But why does that demand have to go to Hollywood? Like you're saying the demand for movies is going to remain durable. I agree. But what I'm saying is that people don't care when they show up to a movie theater. They show up to Regal, they show up to AMC, they get their popcorn served by Optimus, of course.
Of
And
course.
then they go and sit down in the theater and they watch a flick. Do they care if it's coming from human production people and human actors out of 21st Century Fox, or if it's coming from AI generated production and AI actors and AI voices out of Netflix or YouTube? Do they care?
I guess that would stem on the basis of do they know? And if you can't tell, then I guess you wouldn't care.
Well, and I also think it's just going to be better, right? I mean, if you're relying, I just think AI is going to be better than humans at stuff like that. When it comes to the creative direction of a script, deciding what story to write, what story to tell, deciding how to tell it, deciding who to cast, right? Like humans are limiting. Like when you're doing F1, you're limited to deciding, do I want Brad Pitt or George Clooney, or like you're limited by the people that exist in the world. The people that can act and exist in the world that overlap, right? You're
Mhm.
limited by that. With AI, you're not limited by that. You can cast whoever you can think of, right? Like you think of it and it becomes an actor. That's the future of AI. And so I don't see how that future loses to a future that is limited by human selection. You know what I
I guess
mean?
the argument there is part of the appeal of TVs and movies is the star. So we know and love a Clooney. Uh,
Yeah.
that I mean, but that's not to say that AI star can't be created. But
No, I would 100% agree with you. I do think that there is an attachment to movie stars and its person to person connection. I totally agree with that. I think it's 100% true. But one thing I would note is that I think even that has faded in the last 20 years. Like, think about how big, like when I was growing up, when I was 5, 6, 7, 8, 9, 10 years old, how big Brad Pitt was, how
yeah,
big Angelina Jolie was, how big Leonardo DiCaprio was, how big Kate, like they were huge. They were mammoths. Now they're not really. Like they just aren't. They are still very wealthy, very powerful, very influential people, but they are not what they were in terms of clout and societal admiration and like they just aren't anymore. Think about the new generation of actors. I can't even really name them. I don't even know who the new generation of actors is. Right? There was that Miles Teller guy, and he's not even part of the. He's probably in the middle generation, and he's kind of faded entirely. There was
yeah.
that Glenn Powell guy. He's like 10% of what Brad Pitt was back in the day. Sydney Sweeney's a name that comes up. She's 5% of what Angelina Jolie was back in the day, right? This new generation is struggling because I don't think people are putting actors on pedestals like they used to be put on. And I
What I
think
think
part of
happened
that,
there,
go ahead.
what I think happened there was there was a certain decentralization to fame. You know, like TikTok. You got TikTokers with 10
But
million
that,
followers.
that that that's my point. That's because of
Yeah,
technology, right?
yeah,
Technology
technology.
created that decentralization. Technology made it easier to access other people and other personalities and other uh, types of content. AI is going to be the same thing. It's just the next step in that decentralization movement. It's going to further decentralize access to types of content and types of actors to where now you're getting AI avatars and AI actors and AI generated content. So it's just a further decentralization and democratization of content creation and content access. And that's why I think what AI is doing is simply accelerating a trend that was already in place for the last 20 to 30 years because of the internet. AI is just an acceleration of that. And so that's why I think, yeah, it's going to be a tug of war. It's not going to be overnight. Again, put the frog in boiling water, it jumps out. But put the frog in room temperature water and heat it up a little bit over time and it doesn't jump out. That's just going to happen. Kind of put us into a world where we get a little bit of AI content. We don't freak out. Give us a little bit more. We don't freak
A little
out. Give us a little bit
more.
more. We don't freak out. Then all of a sudden we wake up 10 years later and 90% of the content we consume is AI generated. That's what's
Yeah,
going to happen, in my opinion, and that's a reason to be long new tech media players and short legacy media outside of Disney. I think Disney again has a moat that is very defensible.
100%. I'm a pragmatist, so I generally agree. However, as a movie lover, I like the idea that movies are human stories that are made by people. I'd even like to throw that out to our viewers now. In 2 years, if there is a fully AI movie, are you watching it? But let's move on to the next topic there. So the latest on trade talks, it looks like Trump is once again floating around a different tariff or a different number. We're looking at 15 to 20% baseline tariffs. Are you at all worried, Luke?
No.
Taco
All
party?
all bark, no bite, man. All
Yeah,
bark, no bite. There's nothing to it. They're chest puffing. It's political theater. It's brinkmanship. Let them go back and forth. I've never really. I mean, I was concerned in the first round because I wasn't sure if it was all bark or no bite back in April. Like when he came out swinging with that, it was like, oh, whoa, is he serious? Like, do we have to take him
right.
seriously now? But then it turned out to be all bark, no bite. Now I'm just like, all right, I've seen this movie before. He could come out tomorrow and say, I'm going to put 127,000% tariff on China, and I think markets would go down maybe 1%. Um,
Yeah.
Markets just don't care anymore. I don't care anymore. We know deals are going to get done. Like every piece of every commentary we get from the White House that is like, tough talk is counterbalanced 24 hours later or 12 hours later or less with some comment about, well, I actually think a deal's gonna get done, in the next few days. Like, Trump's floating around all these big tariffs, and then over the weekend we get talk from Lutnick saying, a deal with China or the EU is coming, and then Besant says deal talks with China in a good place. So it's just chest puffing. I wouldn't pay any attention to it. I'd stay focused on what matters, the economy, technology developments. And when it comes to trade, the headlines will remain. Ignore it. I'm not worried about it at all. Again, something's going to have to become action in order for me to be worried about it. And nothing really has yet. There isn't much action happening right now. So
Do
long as
you
there's a lack of action, there will be a lack of concern in the markets.
do you feel like there could ever be a boy who cried wolf moment where their foot push comes to shove and something does happen?
You know what? No, I really don't. I think that's the risk. That is the
Yeah,
big risk. I don't think it happens because of globalization.
right.
Boy who cried wolf. All right, wolf actually shows up. Bad stuff happens. Then the whole system breaks. Right? Like the U.S. does go ahead with, let's say, 20% tariffs on everybody. the whole system breaks, and the U.S. gets hurt dramatically as well.
Right.
The people in charge, I know there's a lot like, oh, the government officials are so stupid and so dumb, they don't know anything. They're competent enough, okay? They're not geniuses, but they're competent enough. And they're competent enough to understand that if they push it to the brink and go over the cliff, they go over the cliff too, as does everyone else. I don't think anybody is suicidal. I don't think anybody wants to commit political suicide in that manner, or destroy their country in that manner. And so I do not think anybody is going to do that. I don't think China's going to do that. I don't think the United States is going to do that. I don't think Europe's going to do that. I don't think Mexico's going to do that. Canada's going to do that. Which is why, again, our acronym, everyone's talking about taco, 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 taco. Trump always chickens out. Our acronym is EACO. Everyone always chickens out. No
Mhm.
one wants to be the guy or girl that destroys the whole global economy because of a little ego, right? Like, no, just don't do it. And they aren't, and I don't think they will. I don't think anyone's going to do that. So that's the risk, but I think that risk is pretty mitigated.
100%. Competent enough is probably not what you want the leaders of our country to be, but we're here. This is what we got.
Yeah,
Um,
yeah, there you go. Yeah, I mean, people. Yeah, what's funny is I meant to say that as a compliment. Like that's how bad the perception is of political leaders across the world. Is if
yeah,
I say competent enough, and I mean it as a compliment because everyone else is calling leaders of the world, stupid more or less. So
everything
I just
across the
yeah.
board. Yeah.
Yeah, we're in a weird state politically at the global level too, and yeah, but still, again, I think there's enough competence up there to understand that if you really do push to the brink and go over the cliff, you go over the cliff as well as everyone else, and it's a worst case situation, and I don't think anyone's going to do that. Does that mean people are going to stop chest puffing? No, I think your chest puffing is going to continue. But I think again, at the end of the day, nothing to worry about.
All right. So let's pivot over to markets then. On this podcast, you've been very bullish. You believe the second half of the year, we're only going to see an increase in stocks. However, in your portfolios that we did mention earlier, and we'll put a description and put a link in the description for anybody that's interested, you have been paring down on stocks. Are you worried about the markets? Are you hedging? What's going on with that, Luke?
Yeah, in our model portfolios across a lot of our publications, we've done some trimming recently. We've trimmed back a little bit on Robinhood, trimmed back a little bit on SoFi, Coinbase, Lumentum, things that have been really red hot. A few other stocks as well.
Mhm.
So we've done some trimming, and we've done some trimming because it's basically a technical call. Got a
Yeah,
chart for you here, pulled them up.
beautiful.
Yes, we think the fundamentals underlying stocks are very healthy. We think stocks are going to go higher in the next 6 to 12 months, powered by good stuff in the AI world, re-strengthening of the economy, rate cuts, and the trade war noise fades into the background. All that powers strong earnings. As go earnings, so go stocks. So we think that stocks are going higher over the next 6 to 12 months. But even the strongest bull markets have pullbacks, and right now we are currently approaching technical positioning that is consistent with a short-term top in the markets. That is, if you look here at the S&P 500, this is the S&P 500 ever since its bull market started in late 2022. So let's call it the AI bull market. This green is the trading channel, if you will. It's been in this upward sloping channel during the AI bull market. You can see that we're approaching the top side of that channel. As
Yeah.
of yesterday, today the RSI has come back below 70, but as of yesterday, the RSI was above 70. So we were overbought on the RSI near the top side of the AI bull market trading channel. To me, that's technical positioning consistent with the top that looks like late 24. And we didn't really fall for a while, but we did kind of fall flat, and then we had the trade war chaos. Yet our overbought RSI right here in July 24, not near the top side of the channel, but not at the top side of the channel, but nonetheless, July 24, overbought RSI, short-term pullback here. We got some overbought conditions here in March of 24, got that pullback here. We got way overbought here in December of 23, got a little bit of a pullback here. So I do think that, again, overbought here, a little bit of a pullback here. So I do think that current conditions warrant a short-term pullback. The NASDAQ looks the same if you look at the NASDAQ. This one's also not overbought anymore, but RSI was overbought yesterday, 75 on the RSI, approaching the top side of the channel, way above the 200-day moving average. This is consistent. We had that action here, flat line for a bit, had that action here, pulled back for a bit, got overbought RSI here, pulled back a little, overbought RSI here, pulled back a little. So I do think that, again, the technical positioning across the markets right now is consistent with the short-term pullback. Not to mention, we've also seen a lot of, I'm going to call it FOMO action in the markets. We've seen names like Open Door and QuantumScape and Joby Aviation just absolutely go vertical. I mean, like moves that do not make a lot of sense. And so when you see names like that go crazy like that, and you have a backdrop of the broader averages, the S&P 500, the NASDAQ, both being in overbought territory, both near the top side of their trading channels. That tells me that technically we are near a short-term top and we are due for a short-term pullback. But I think any pullback we do see in the markets, maybe it's 2 to 5% over the next few weeks, will be a great buying opportunity. We're going to pull back, we're going to bottom, we're going to U-turn, and the rally is going to continue because earnings are going to be strong. Multiples are not that extended. Rates are going to go lower. The economy is in a good position. AI investment and spending remains robust. So for all those reasons, I think that short-term pullback, bottom, rebound, rally continues. That's why we're trimming today to give us ammunition to buy when that pullback comes and then ride the next leg of this rally higher. So that's kind of explaining our recent trimming of positions across the market.
Got it. Yeah, definitely makes sense. And some of those names are probably overbought as well. But I do want to, speaking of earnings season, we got TSMC. They kicked off Q2 with a huge report, and they also boosted their guidance for the rest of the year. Do you think this is a, a precursor for the rest of tech, if you will, Luke?
Yeah, so let's look at the TSMC numbers. I do think this is a precursor for the rest of tech, to answer your question. But we look at the numbers. So here's the latest quarter revenue growth. We got 38%, 39% around 38.65, 39% revenue growth in Q2. The expectation is now for 25% in Q3. We were at 42 in Q1, 39 the quarter before, 39 the quarter before, 40 the quarter before. So we've basically been right around 40 for 1, 2, 3, 4, 5 straight quarters. A little bit of a step down next quarter, but still really robust. And it's especially impressive because of the lap, right? Like this Q3 number, this 25% is lapping against 39%. This 39% is lapping against 40%. So these numbers, the Q3 24 growth rate of 39, the Q4 24 growth rate of 39, the Q1 growth rate of 42, these aren't as impressive as this 39 number here in Q2 and the 25 number in Q3 because these three were lapping against 16% flat and actually negative revenue growth. But now we're putting up 39, 25% against, 40 and 39. Like we're lapping big growth and we're still putting up big growth. That's really impressive. That speaks to the durability, the resilience of the AI investment spending trend. And the reason I think it provides a really solid read through for the rest of tech is TSMC sits at the top of the funnel of AI spending. If you're going to do anything in AI, it starts with a TSMC chip. They fabricate all the chips. So if TSMC is reporting 39% revenue growth this quarter, 930 billion. This is in TWD. Let me get it to USD. 30 $30 billion in revenue last quarter, then that means $30 billion came into TSMC to essentially build AI chips. Where are those AI chips going to go? Well, they're going to go into data centers. They're going to be used to power LLMs or maybe SLMs. They're going to be used to power AI models more broadly. Those AI models are going to proliferate. On top of those AI models, you're going to build AI applications, AI services, AI products. Those are going to make their way into the world. So TSMC, top of the funnel. If all this money is coming to TSMC, it's going to flow down the funnel and it's going to have an impact on the infrastructure layer, the application layer, the products and services layer. It's going to have an impact everywhere. So, yes, I do think those really strong TSMC numbers last quarter, I mean, they provide a fantastic read through for AI companies going into the Q2 reporting season. And I do think that Q2 earnings across the board are going to be much better than expected, and especially so on the tech front, because earnings estimates have come down dramatically since the trade war started. But the economy, based on the data I'm looking at, has not really slowed down all that much since the trade war started. So reality has been steady. Estimates have decreased. That means reality is going to beat estimates in this earnings season. So I think you're going to get big beats across the board. And the TSMC numbers tell me that the biggest beats are going to happen in the tech world, where AI investment spending is not slowing down at all. So that's why I'm encouraged and very constructive and positive on stocks over the next 6 to 12 months, because I think the earnings trend is going to be really good. We just need to wash out a little bit of froth here in the short term.
Gotcha. Yeah, that I mean, it is a very strong indicator because people are buying the chips. They wouldn't be buying if the business wasn't going good. I
Yeah,
almost
they're not buying the chips to sit on them and look at them. Tell you
right,
that.
yeah, quite obvious. Now, on the tailwinds of crypto week, it looks like altcoins are gaining some more momentum. Could you
Mhm.
dig into that? Are we going to see another boom in altcoins like we did in 2021?
Yeah, I do think we are going to see that. I think this is the start of the massive kind of final hurrah of this crypto boom cycle. And in those massive final hurrahs, that's when you get the altcoin season. That's when you get altcoins going crazy. Let's first look at Bitcoin for a moment. I pulled up a chart here for you. I think we've looked at this before. This is my linear
Yeah.
regression trend line on Bitcoin. And again, based on this, I see Bitcoin going to 150, 200,000 by late summer, actually, kind of by September-ish. And we are on track for that, right? We are pushing higher. We've dropped 2 standard deviations below the linear regression trend line. Now I think we're going to swing to 1 to 2 standard deviations above, consistent with what we did in late 24, as well as late 23, early 24, as well as late 22, early 23. So I think we're in one of these big kind of steps higher in the Bitcoin pattern. So I think Bitcoin goes to 150, 200, but to your point, altcoins are starting to gain a lot of steam. Ethereum has been ripping higher. We're seeing a lot of altcoins. I think more than a dozen are up more than 25% in the last week, more than a dozen of the top 100. So you're seeing some big returns there. You're seeing Bitcoin dominance slip. You are seeing the altcoin season index reach highs, reach levels it hasn't reached in several months. So I think altcoin season is here. I do believe that. I think rate cuts are coming. I think we're going to get big risk on sentiment. I think we're going to get retail money flowing in, and I think that we're going to get 6 to 12 months of really, really excited, enthusiastic, parabolic price action in altcoins. I think it's going to look a lot like 2021. And then unfortunately, I do think it kind of ends in another bust cycle. Probably, summer 26, if not a little bit earlier than that. I think we do get a bust cycle. But I think between now and then, I think we are going to see some massive gains in the altcoin world.
Got it. I mean, even if it does go bust, I guess you would say with altcoins, you're kind of betting your 1% of your portfolio, 2% of you're not going crazy with any given altcoin, right?
Yeah, I mean, with altcoins, position sizes should always be very small, because you don't have to put in a lot to potentially make a lot, and you could lose a lot. So, position sizing in altcoins always has to be small. But I think that the name of the game with altcoins is to buy low, sell high. It's not to buy in hodl. Really, I don't think that's the
Yeah.
altcoin game. That might be the Bitcoin game, But I don't think it's the altcoin game. The altcoin game is buy low, sell high, and so I think right now a lot of altcoins are still pretty low relative to where they were in 2021, or relative to even where they were earlier this year. Kind of in December 24, we got a really big upcycle in altcoins. They're still relatively low. So I think, we can buy low now, even after they've had a little bit of a lift, and I think we can sell higher, much higher in 6 to 12 months. So I think there's a lot of money to be made in this altcoin season by buying low and selling high. Now, there's a really interesting debate to be had about whether or not we are going to get a bust cycle. Some would argue that we're not going to get a bust cycle because institutional money is now in the game. That one of the reasons we had such big bust cycles in the past is because it was mostly retail money, and retail money is very wishy-washy. Institutional money is much more rock solid. So there's an argument, and I am here to entertain it, as to whether or not we may not get a bust cycle in 26. Like history says we should, but we may not because of the introduction of institutional money into the crypto markets. I understand that argument. I don't think it saves us from a bust cycle. I think it reduces how big the bust cycle is going to be.
Mhm.
Previous bust cycles have seen Bitcoin drop, 80 to 90% over the course of about 16 to 24 months. I don't think we repeat that. I don't think we drop 80% this time. I think maybe we drop 40%. But I still think we have a big drop. And I still think altcoins have a big drop because there's not a lot of institutional money in altcoins. The institutional money is in Bitcoin, not in altcoins. So I do think we have a bust cycle coming up, but I think there's a lot of money to be made before that bust cycle arrives.
Got it. Okay. Yeah, that's a lot to chew on there. Now, I do want to move on to the next bit of news, something that I'm actually really excited about personally. Psi Quantum Corp will start construction in Chicago, the south side of Chicago, on a 128-acre project to build a supercomputer. And it's a pretty aggressive deadline. They are looking to go live in 2028. So, not construction completion. We're talking about computer switch on. This seems like a really big deal. Do you think it's time to buy quantum stocks now, or how are you parsing out this news, Luke?
Yeah, I think quantum, like humanoid robots, it's becoming a reality, right? Like people kind of throw flying cars, eVTOLs, quantum computing, humanoid robots, self-driving cars. They kind of all throw them into this science fiction bucket, but that
Mhm.
bucket is quickly becoming a reality across the board. Self-driving cars are expanding everywhere. eVTOLs are they're actually having test flights in the Middle East, and they're going to start commercial operations in 2026. Quantum computing, to your point, they're now building big quantum computers in places. People are buying quantum computers. Companies are using quantum computers to do useful things, and humanoid robots are serving popcorn in Hollywood. So that science fiction bucket is becoming a reality. And I've always said for years and years and years and years and years, the best investment opportunities are when sci-fi becomes reality, right? When something that everybody thought was impossible becomes possible, that opens the door for massive investment opportunities. Quantum is one of those. People thought it was impossible. People thought it would never happen. If it was going to happen, it was going to be NVIDIA CEO Jensen Huang earlier this year, right?
Right.
25 or 30 years away. And now he's like, oh, no, it's here already. It's like, boom, yes, it is. Wake up, people. Quantum has arrived. Now, if you look at my quantum index, remember my quantum 4, quantum computing, ion Q, Rigetti, and D wave, looks good to me. I mean, we kind of flatlined a little bit at the previous highs, but kind of retreat and then boom, we're bouncing back. This is still higher lows and higher highs. This is a solid uptrend in quantum stocks. Yes, they have soared. I mean, this index has gone from what? Basically $10 to $100, so 10x in less than a year. But I think it keeps going. We are very early in the game here. Let's look at this for a moment. Ion Q. Let me pull up. Let's go to the financial analysis on it. IonQ market cap 11.8 billion. Quantum computing QUBT market cap 2.6 billion. D-Wave QBTS market cap 5.2 billion. Rigetti RGTI market cap 4.7 billion. So call this 5, call the other one 5. You got 10 on IonQ. And then what was
20,
QUBT?
22 billion total almost.
2 bill, yeah, call it 2.6, call it 2, yeah, 22 billion total. The total market cap of these four quantum stocks is less than $25 billion. You want to know what classical computing giant Microsoft's market cap is? $3.7 trillion. So you do the math on that. Let me pull out
Yeah,
my
yeah.
phone. Let's just do the math on that. Let's
Let's
say
do the math on that. Yeah.
$3.7 trillion divided by $22 billion is 170 times. That's why quantum stocks have a lot more room to run. The collective market cap of quantum computing stocks is less than $25 billion, at least the major four. Yet a classical computing giant like Microsoft has a nearly $4 trillion market cap. Okay? That's one company. This is why quantum stocks have room to run. I mean, people look at these numbers and they're like, hey, let's go to IonQ. That's my favorite in space. Everyone knows that. It's no secret. The reason people are like, oh, it's overvalued is, oh, it's a $12 billion market cap and they're only going to do 86 billion in revenue, 86 million in revenue this year. That's, this huge price to sales multiple. It's overvalued. It's like, no, great companies grow into those multiples. It's valued that way because that number is going to keep on soaring. Look at the projections. We go 86 to 168 to 322 to 500 to 750. I mean, this is rapid growth. It's going to keep on scaling. I think this becomes tens of billions of dollars, so not hundreds of billions of dollars in revenue one day. And at that point in time, the market cap may be up towards $1 trillion. Seriously. So I think quantum stocks, again, high risk bets. No guarantee IonQ wins, no guarantee Rigetti wins, no guarantee quantum computing wins, no guarantee D-Wave wins. But I think good odds one of them wins. And if one of them wins and gets 170 times return from here, then it's going to more than offset even 100% losses in the three others. That's why you buy the Quantum 4 index. I think sci-fi is becoming reality. I think these stocks do go a lot higher in the long term. And even in the medium and short term, really.
Definitely. I do have to ask, with a quantum machine coming online in 2028, how do you think that affects the crypto market? Because the basis of the crypto market is the blockchain, unbreakable encryptions and everything. But once you have a quantum computer, that kind of goes out the window. What do you see? Probably, let's say that quantum computer is live 2028. What does that mean for crypto in like 2030?
Yeah, that's a great point. Quantum does have the potential to break the encryption underlying cryptos, but I think that the applications of quantum in on the onset will not be advanced enough to break crypto encryption. So it will be, I think, probably at least until 2035-ish, rough estimate, before we have quantum that is good enough, powerful enough to broadly break crypto encryption. And at that point in time, and that gives us 10 years here, I think the crypto industry will innovate in the meantime to pivot around that, to defend itself from that encryption breaking. Maybe they use quantum computers to develop,
Right.
QKD, quantum key defense. So maybe that's what they do. I don't know, but I think that there is ample time for them to figure it out, and it's not something that should keep people away from cryptos in 2025. Come 2032, 33, and cryptos still haven't even thought about it, haven't figured it out, then yeah, it becomes a risk to stay away, a reason to stay away. But in 2025, it's not a reason to stay away just yet.
Gotcha. So pretty safe to hodl Bitcoin for at least another 5 years.
I mean, I think so. I think Bitcoin is, there's all this stuff about Bitcoin now being able to Trump signing into executive orders allowing
Hmm.
Bitcoin to go into 401ks and retirement plans and all that stuff. I mean, I think that's good. I think it's good that people get access to a long-term investment in Bitcoin. I do think that is a positive thing for people for 401k plans.
Awesome. Okay. Let's pivot to robotaxis. Uber has been making deal after deal after deal. We got something with Baidu, then Lucid and Neuro. The robotaxi rollout, like we're talking about the future, has become global. The space is really heating up. Uber. Does that seem like a good stock to buy right now, or what do you think, Luke?
I think Uber is a super winner. Um, they they have cemented their positioning as at the epicenter of the robotaxi revolution. The big risk with Uber, I think we talked about it last week, was that they were too reliant on Waymo, right? Uber doesn't provide the self-driving technology, and that's the biggest piece of the puzzle to a robo-taxi, to a self-driving car, is the technology that actually makes the car drive itself. Uber provides a logistical network, which, yes, is important, but one could argue that at scale, Waymo could replicate that. So the biggest risk to the Uber bull thesis was they're too reliant on Waymo, and at scale, Waymo is going to ditch them. For example, I have my phone. I think we talked about it last week. I don't go to the Uber app to hail a Waymo. I go to the Waymo app. I go to Waymo One to hail an Uber. That's what I do, or to hail a Waymo. I mean. So again, the risk was pretty big with Uber as it relates to its partnership with Waymo. The one way for them to eliminate that risk was to partner with everybody else, and that's exactly what they're doing. They're partnering with Baidu to roll out robotaxis globally. They're partnering with Neuro and Lucid to roll out, I think it was 20,000 robotaxis in the US. So now all of a sudden, this octopus has its tentacles, right? Now all of a sudden, Uber is with Waymo. Uber is with Baidu. Uber is with Lucid and Neuro. I think they have a deal with somebody off in the United Kingdom as well. I forget the name of them. But they have deals everywhere now. And what that means to me is that they've cemented themselves at a position where if you're going to launch robotaxis, you're going to launch them through the Uber network, or else you're going to be at a massive disadvantage and you're never going to even have a chance to scale. So I think that makes Uber stock a really, 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 really attractive play on the robo taxi rollout. And the stock has been acting incredibly well. If we kind of look at the chart right now, I mean, this thing is gone absolutely nuts. So let's draw the channel on it from these lows down here and boom, boom, boom. We'll do that. Boom. So I mean that's an attractive chart right there. You know, we bottomed back in early 23. We've been on a nice uptrend ever since. Got these new partnerships soaring to all-time highs. A little bit of a retreat down to the 50-day. Okay, showing support. Higher lows, higher highs. Uptrend still intact. This one, in my opinion, by the end of the year, pops up to 115, 120. I think that's where we're going on this one. I think long term it stays in this uptrend channel throughout 2026, so long as robotaxis keep on rolling out, and they will keep on rolling out throughout 2026. So when I look at the technicals on this one, I'm going to give you some price targets here. I think by the end of the year, we're sitting near 120. And I think by the end of next year, let's see if this uptrend does persist, because I think it will. I think this is the channel for the stock now. I think by the end of next year, oh, lost it. What are we at? 140, 150. I think that's where we end up with Uber. So I think Uber 120 end of the year, 140, 150 at the end of next year. I think it's a slow and steady but solid gainer in the robotaxi boom. So really like what they're doing. But still, really like what Waymo's doing. They got the big moat with Google. I really like what Tesla's doing. I mean, Tesla is rapidly expanding their operations. I think that's pretty cool. So I like what Tesla's doing in the space. Lucid, are, are they a robo-taxi play now? Did Uber just throw them a lifeline? I think Lucid is a potential sleeper here, right? Like if you want to hedge against, if Uber wants to continue to hedge against Waymo, if Waymo keeps going its own way, then they're going to keep on partnering more and more with Lucid. So I think Lucid all of a sudden becomes a self-driving play, a high upside self-driving play. So I think the whole space is really heating up. You're seeing the battery stocks like QuantumScape, Solid Power, Enovix. You're seeing those battery stocks really start to come and have some big rallies as well. So I like the whole space. Again, I think both at the self-driving layer as well as the supply chain, there's a lot of winners to be had in that universe.
Yeah, I really like the Lucid news there. I think I read a couple of weeks ago, Lucid did have the longest single trip on an EV to date, around 700 miles or so. So maybe the Uber news was linked with that, maybe not. Who knows? But that was what it was fun to see Lucid come back into the fold in terms of EVs. But I
Listen,
guess
I think Lucid cars make a lot of sense as a robotaxi. They're really comfortable. They're really tech forward. They're really nice. My knock against them was that they're not sexy. Like there's nothing
Mm,
really. I don't think there's anything all that sexy about a Lucid. If you've been in one, it kind of feels like your grandpa's really nice Cadillac. Like it's very comfortable, but it's very old feeling, and it's very
yeah.
not old feeling. Like again, it has all the tech touches, but it's just very much. It's not like sleek and sexy like a Ferrari or a Lamborghini or something like that, or like an Audi, right? It's much more like comfortable.
So
Um,
the
yeah, but
inverse expression, it's like it is your dad's EV, right?
right, it is. Yeah, it is. It is your dad's or your grandpa's EV, and I think that was actually a hindrance for them when they were trying to sell to consumers because I think they tapped out that market, and then younger buyers were like, yeah, I don't really like it all that much. I bet the demographic that buys Lucids is probably 50 plus. Um, but you know what? As a rider, as like it pulls up to my house as a robotaxi, and I sit in the back seat. I don't think there's any back seat more comfortable than a Lucid.
Mm.
So it's spacious. The seats are super comfortable. It's got all the tech features, like I said. That is a dream robotaxi car, in my opinion. So I think it makes a lot of sense that Uber partner with them, and I could see that partnership really growing in the next few years as Uber tries to hedge against Waymo. Waymo going at it alone.
Yeah, that will be fun to see. I guess we gotta watch the roads, right?
Yeah, yeah, indeed.
All right, so on to the next. We got nuclear stocks. So last week, Westinghouse announced plans to build 10 new nuclear reactors in the States starting in 2030. And then we also have Microsoft and Idaho National Laboratory announced a collaboration with Azure and AI to stream nuclear licensing processes. And Oklo tapped Kiewit Nuclear Solutions as a lead contractor for its first Aurora powerhouse in Idaho. These are a lot of big moves, a lot of major steps in that sector of the market. Overall, it seems like the nuclear stocks have potentially flatlined. Is the rally done, or do we see more to come?
Yeah, so they were flatlining until now. Let me show you the chart here, right? So here's our nuclear 10 index, a basket of our 10 favorite nuclear energy stocks in the market: Constellation, Vistra, SMR, Oklo, BWXT, LEU. This is a basket of those 10 stocks. As you can see, it's gone absolutely nuts. But recently, look at this. So it did, like the rally did we peaked out, we kind of moved down, moved lower, not great. And then boom, we got this burst higher. And today, as of today, up 5% on the day. And we've knifed above that previous high of 1142 and 1150 right now on our nuclear 10 index. So nuclear stocks are actually breaking out following the good news that you just talked about. Sometimes price action's a little bit delayed
Right.
relative to fundamentals. Sometimes it's ahead of the fundamentals. Sometimes it's behind the fundamentals. Last week, we got a swarm of really good fundamental news as it relates to nuclear stocks, but there was also some trade war noise and chaos that kind of kept a lid on where those stocks were going, to actually caused a little bit of negative price action. But now that lid's being lifted, right? The White House is saying probably need to deal with it. The state of talks with China is good. Probably need to deal with EU. So now that that is out of the way, now the bid comes into play, and now we're seeing nuclear stocks break out. I love nuclear stocks as AI power stuff. I mean, talk about positive read through on TSMC. If TSMC is saying all this money is being bought for, or all this money is being spent on chips, those chips are going into data centers, and those data centers are going to need more and more power. So nuclear stocks, I think they're going to keep on soaring as the AI investment spending trend continues. I also think lower interest rates will really help here. These are not cheap projects. Nuclear projects are absurdly expensive. A lot of them are debt financed. A lot of them are interest rate sensitive. You pull interest rates lower, you get more construction of nuclear reactors. These stocks go even higher. So I think the the nuclear 10 index, 10 favorite nuclear stocks. I've loved them for a while. I am going to keep on loving them. I think they're going to keep on pushing higher.
Yeah, I mean, another one that's just it's inevitable. Like we are going to nuclear. I mean, everything has kind of been inked already, right?
Yeah, I just it's again, like I said, we talked about solar energy and wind energy and hydrogen energy in the past, stuff like that. I used to like that stuff. I don't anymore because I think nuclear is going to obsolete it. I think nuclear fission has been chosen as the power source of AI today, and then nuclear fusion will be chosen as the AI power source of tomorrow. When fusion comes around, it's going to obsolete everything else, even oil and gas, I think. So that's when the whole system changes. But until then, fission is definitely destroying demand for solar and wind and a lot of the other clean energy sources out there. So I would be long nuclear, and I don't know if I would be short solar, wind, and hydrogen and those other things because they've already been washed out so much. But I
Right.
definitely would not be long those sectors. I would be long nuclear.
Gotcha. Yeah, I mean, fingers crossed on nuclear fusion because the summers have just been getting hotter and hotter. All right, so I do want to move on to our exponential stocks. We are going to kick it off with open door. We talked about it a little bit earlier at the top of the podcast. Can you dig into that for us, Luke?
Yeah, this one's gone. I mean, this one's been absurd if you kind of look at it. This stock went from 50 cents to $5 in a matter of about 20 trading days. Yeah, you can see the move here. 50 cents. This is a daily chart, but if we kind of get the let me get the tick chart for you. Do a 15-minute over 30 days chart. You can see where it hit 5. Yeah, so basically hit 5 the other day, right? Yesterday, 4.87. I think 4.90 was the high. Was it 50 cents? So we've gone absolutely absurd. Let me get back to the daily chart for you. So 50 cents to $5, pulled back to 3, kind of sustaining around 3. RSI got to 95 essentially. Freaking crazy. But look, it's kind of a I mean, this is a stock that got wiped out, right? $36 down to 50 cents and lost 99% of its value. And now is this just a dead cat bounce or is this legitimate, right? I think the technically you want to look at that $5 level where the stock got rejected yesterday. That's a big level because that's the level that it topped out at multiple times. Sorry, right around, I'm not there, right there. $5 level. That's about $5. It's got rejected at multiple times, right? Rejected here twice, almost got there 4.70 in late 23. Major rejection at 5. So technically you want to wait for a break above 5 to sort of confirm this rally. Fundamentally, fundamentally I like it. I think that Open Doors iBuying business model makes a lot of sense. I think that having a tech forward disruption of a very overly complicated, overly slow, overly inefficient housing market and home selling and buying process makes a lot of sense. Why not digify it? Why not streamline it? Why not simplify it? Why not use data and analytics for pricing? Why not get rid of real estate agents? I think all of that makes a ton of sense, but it's a huge undertaking. It is really hard to do, and you need a lot of things to go right in order to successfully pull it off. Nothing, absolutely nothing has gone right for Open Door in the last 4 years
Right.
because the housing market has been totally wacko. Like the housing market was largely outside of the great financial crisis, largely stable with similar conditions from, I don't know, 1940 to 2020, outside of a, maybe 2 or 3 year stretch there around the great financial crisis. For
Mhm.
70, 80 years, the housing market kind of did one thing. Home prices appreciated 2 to 3% per year. Housing supply kept going up, and buyers kept coming into the market, and rates were pretty low, especially post in the 1970, right? That that has been anything but the case over the last 4 years. We've had the most unusual housing market ever. We've had no supply. We've had a huge spike in demand for homes. We've had interest rates spike. We've had sellers not budge on prices. It's like this has been the weirdest, most unusual market, and it followed one of the most weirdest, unusual buying frenzies in 2020, 2021. So Open Door tried to scale this business model in 2020, 2021, and then housing market conditions went from as hot as possible to as cold as possible as quickly as possible. So they got left holding the bag on all this inventory. They had to sell for losses, they had to downsize, they had to do all these things. But you know what they've actually done is they've survived. They've learned how to adapt. They've learned how to improve. As the old saying goes, if it doesn't kill you, it only makes you stronger. I think that's Open Door's situation here. They were not killed by the most horrendous, unusual housing market in the last 4 years. Instead, they survived. They learned how to adapt. They leaned down their inventory. They improved their pricing models. They integrated AI into their operations. They've become much smarter as a company and as a business. So when the housing market does inevitably normalize, I think the business is in a position to absolutely take off like a rocket ship. The precedent here is Carvana. Carvana also, let's look at that stock. Carvana also got absolute, this is a log chart too, got absolutely destroyed from 2021. Let's non-log it actually. Actually, we'll keep it log, whatever. From 2021 all the way down to late 2022. It lost 99% of its value. The stock dropped from $370 to $3.70. It lost 99% of its value. And then since then, the stock has soared. Let me get to the high. The stock has soared 9,229%, actually a little bit more, 9,500% from 3.70 back to about $370, 357 to be exact. Carvana did this. Carvana, you know what? They bought a bunch of cars in this when the car market was super hot, interest rates were low, prices were going up. Then housing or the car market cooled off, interest rates went up, people stopped buying cars, they were left with all this inventory, prices depreciated, they had to unload it, bunch of leveraging got unwound here, boom, absolute crash, 99%. Then you know what happened in 23, 24, and 25? The economy started to improve a little bit. The Fed stopped hiking rates, interest rates stopped going up, people started buying some cars again, and the business model absolutely took off. Carvana got smarter during this downturn, and then when the auto market somewhat normalized in 23 and 24, Carvana stock took off from about $4 again to $370 for a nearly 10,000% return. I think Open is due for a similar turnaround because I think the auto market and the housing market have a lot of similarities, but the housing market is much more rate sensitive than the auto market.
Yeah.
Auto payments, a couple $100. Mortgage payments, thousands of dollars for people. I think the average mortgage payment's about $3,000 or $4,000 for the average American out there. So it's a much more rate sensitive market, much bigger price tags, much slower moving inventory. It's just a much riskier situation than with auto. So Open Door is just the home version of Carvana, which means it's the more leveraged, riskier version of Carvana. So Carvana stock took off and rebounded like crazy in 23 and 24 when the Fed stopped hiking interest rates and the economy sort of got a little bit better. Well, Open Door could take off in 25 and 26 as interest rates come down and the economy actually gets fully better, gets fully healed, and the housing market normalizes. So I think it's a long shot. It's a high risk, high reward bet, but I do think that the bull thesis floating around the internet right now of Open Door being the next Carvana makes a lot of fundamental sense to me, and I think this stock will finish the year closer to $50 than 50 cents. That's my bold call on Open Door right now.
I gotcha. Yeah, it is interesting to note, like anecdotally in my peer group, either my friends have bought in 2020 with an amazing rate and they're in that house forever, or we're just waiting. for the market to cool down, rate to go down further. So I mean, there is something to be said about just a little bit more patience with open door to pop off.
Yeah, I mean, it's like I said, it's been a horrible investment so far. I mean,
Yeah.
there's no, it's down 99% from the highs. But this is how Carvana felt at the lows in late 2022. Carvana literally lost 99% of its value before exploding 10,000% higher over the course of 2.5 years. Open Door has lost 99% of its value. I think it could explode. I mean, 10,000% is a lot, but I think it can explode a lot higher over the next 2 to 3 years.
Hey, I mean, even half of 10,000% is is something, right?
Yeah, I mean, I think it's the next Carvana. That's my call on Open Door.
Awesome. So next up, we got STEM, Luke.
Energy storage play. It's been getting kind of a meme stock rally. I don't like this one as much as Open Door. As you can see, it's not much. The Open Door rally you can see on the chart. This one you can't even see, right? Like where did it go? um, Major resistance right here. Actually, kind of clear that. Major resistance there at 16 got rejected. Even bigger resistance right here at 24. We're not clearing those hurdles. We're barely above the 200-day. I don't like this one technically. And then fundamentally, energy storage makes sense, but with nuclear, it makes a little bit less sense because some of the energy storage argument was solar plus storage because solar is intermittent. So if solar deployment's slow, then storage, if solar deployment's slow, then storage deployments should slow as well. I'm not a huge fan of STEM stock here. I think that this is a dead cat bounce in a name that doesn't have that bright of a future. I don't think this is an open door situation.
Got it. Okay. All right. Then I guess moving on to solid power.
SLDP, call it a mini QuantumScape. They're doing solid state batteries. You can see this one, the rally is noticeable on the chart. Definitely looks like a big healthy U-turn. Technically speaking, the MAs smashed together and now they're all turning higher. 50 turning higher, 100 turning higher, 200 turning higher. Got overbought, fell, got overbought again. Steady buying pressure. Breaking a lot of critical technical resistance levels. This, of course, was the first one right around 2.20. Knifed through that with ease and then turned it into support. Love to see that. This was another big one back here, right around $3. Again, knifed through that, then turned it into support. Love to see that. This was another one right here, right around 3.75. Knifed through that, turned it into support, and now bouncing off that. So we have cleared a bunch of major technical resistance levels. And that means I think we're getting back into this and we're going to retake all of this. Next major level to watch is going to be 4.70, but we're kind of filling an air gap up into that. So I think 3.90 turns into 4.70 very soon. And I think this one does retake all these levels. I wouldn't be surprised to see this stock at $10 within the next 12 months. I like SLDP. Technically, fundamentally, I like it as well. Like I said, it's a mini QuantumScape. QuantumScape is having a big moment right now. Solid state batteries are making a big comeback. One, because self-driving cars are becoming a thing, and these are electric vehicles, and all of a sudden the EV mega trend is getting a little bit more momentum. It's regaining momentum, but also batteries and humanoid robots, right? We talked about solid state batteries could be a major component of humanoid robots. So combine Robotaxis with humanoid robots, that's a lot of hype. That's a lot of technological momentum that's being injected into QuantumScape and being injected into SLDP, solid power. So I think this one does keep on pushing higher.
Yeah, fantastic. Okay. Next up, we have ALAB or Astera Labs.
Astera Labs, one of our favorite AI builder stocks in the market, having a bit of a pullback today after a meteoric rally yesterday, but I think this one just keeps on going. I absolutely love this company as an AI infrastructure play. I think as AI investment spending remains healthy, this one will keep on pushing higher. I think we don't stop this short-term rally until 145. That's the previous high. I think we get there. This is just a bit of a retracement after a massive vertical spike. Retrace a little bit, find support, keep pushing higher. 145 is the next stop. We're at 110 right now. I think this one does have room to 145 in the short term, and then medium long term, I think it's a great play on AI infrastructure. So really like this one.
Awesome. Okay. And then on to the next one we just mentioned a little bit earlier, Joby, the eVTOL company.
Joby, another one that went vertical and is now having a bit of a retracement, but that's okay. I think this one is in the early innings of massive growth. Again, successful test flight in Dubai, commercial operation starting in 2026. I think this is a stock that does go a lot higher alongside Archer over the next 12 months. Technically, I think it retreats to this level about $16. We're pretty much there right now. So I think this retrenchment does has a little bit more to go. Find support right around 16, boom, rebound off of that, and then this vertical uptrend continues in Joby. So I like Joby.
Yeah, something funny about a eVTOL company getting an all-time high, right?
Flying up there. Flying up
Right.
there.
Okay, awesome. And is that it for the exponential stocks this week, Luke?
That is all for this week. Those are the five: Open Door, STEM, SLDP, A Lab, Joby. Like Open Door, don't like STEM, like SLDP, A Lab, and Joby.
Gotcha. Okay, I want to move on to lifestyle, and we're going to get a little bit in the weeds here. But a story that's gotten really popular, it's really just taken hold of the internet, is the astronomer CEO and his head of HR getting caught in a bit of infidelity at a Coldplay concert. Now, obviously, this isn't about tech on the surface. However, something we do want to highlight is how pervasive that story was. I saw it, and then in what, 2 days, everybody knew about it. Everybody knew about Astronomer. I even heard reports that the company had gotten so much clicks on it via Google just because of this particular scandal. There is really something to be said about the lack of privacy in this new technology age. Everything happens at light speed. 1 second nobody knows about something, and then the next second everybody does. What do you make about this story from a tech perspective, Luke?
Yeah, I mean, it's a wild story. It's I can see why the internet grabbed onto it. I can see why he was forced to resign. I can see all these things, right? But I agree with you. I think the biggest takeaway for me as like a tech person is, yeah, privacy is so 2024. Or 2021 or 2019 or 20, I mean it's so not today. That privacy doesn't exist in the world today. You are always on camera. You are always at risk of being exposed, or at risk of being filmed, or at risk of having your audio recorded, and you're at risk of that content spreading across the internet at light speed. I I had no idea who this dude was. And then within 24 hours, my parents knew who he was. Like
Gosh.
it's and my wife knew who he was, and all my wife's friends, and it's just like everybody. It's crazy when you really think about it. And then you throw in the AI stuff, right? I mean, all the AI generated content that's come out of that, right? Like you swap the guy's face for, like, one I saw was like you swap the guy's face for the Predator character, and then you swap the girl's face for Arnold Schwarzenegger, and it's like the Predator hugging Arnold Schwarzenegger.
Yeah.
Watch the Predator movies, you guys get it. And there's been all these other things about it, and then AI generated videos of it too, and their different reactions, and it's like AI just exacerbates the problem, makes it funnier if you're observing the content, and makes it more painful if you're the one that's the subject of the joke. So yeah, it's a new world. And I don't think we're reversing course anytime soon. I think obstruction of privacy is the new norm. And with I think we have a lot to worry about in terms of AI fakes and AI generated content and deceiving people and being used for deceptive purposes, whether by governments or media organizations or just rogue individuals, rogue groups. I think you got to be aware of that. And so I think we've had a world of increasing distrust in the last several years. that probably continues. That probably worsens in the next several years as AI creates distrustful content. So I just think that when I look at that situation, I find it incredibly sad. Part of me finds it incredibly funny. But a bigger part of me finds it incredibly telling of the times we live in terms of destruction of privacy, and in terms of technology's ability to proliferate information and content at speeds that humanity has never known. So that's how I look at it.
Yeah, definitely. I mean, I just watched a video recently of the president of Signal, that's the encrypted communication company, talking about how agentic AI is going to, it's going to have to shift the way we think about digital privacy. Because if you have an agentic AI and you want it to do what it's supposed to do, it's you tell it, hey, buy me tickets. It's going to go into your credit card. It's going to go to your bank. It's going to go on your calendar. It might even message your friends. It might hop on your social media. So the way we view privacy is inherently going to change if the course of technology keeps going the way it is, right?
That is that is 100% correct. Could not have said it better myself. If we give agentic AI more power, you're going to enable AI to access very critical information, financial information, healthcare information. It cannot do the things you want it to do unless it has access to that information.
Right.
It cannot schedule your doctor appointments. It cannot help you diagnose things unless it has access to your healthcare information. It cannot purchase a plane ticket. It cannot. A lot of reservations through OpenTable require a credit card deposit now, right? It cannot do the things you want it to do unless it has access to your private and critical information. So you're going to have to trust it with that. Are people going to? Yeah, obviously they are, because
Right.
a lot of people don't even think about it. But it is something to think about, and I think that creates a huge demand at the encryption layer for this stuff. And that's where quantum computing can come into place. I think quantum encryption is going to be the only thing that proves really
Yeah.
unbreakable in the new world. So that's a big application of quantum. So now we're back to quantum stocks. So that's all full circle. But I do think that again, destruction of privacy is something that is going to continue and accelerate in the AI age. And agentic AI could be a big catalyst for even further, uh, call it invasion, encroachment. I don't know what word, but I like the word destruction of privacy for individuals.
Yeah, destruction really makes you tune in, right?
I guess so.
Yeah.
Big word, powerful word.
Powerful. Yeah. Okay, that's it for lifestyle. Now, I do have an exponential question this week for myself personally. Luke, if we mentioned cryptos this week, we mentioned altcoins, Bitcoin. What I want to ask you is, what do you look for when you look for an altcoin specifically? You know, we have Bitcoin; it's a store of value, the basis, it really the flagship crypto. Ethereum, almost similar. But with altcoins, they vary from memes to maybe potentially significant projects. So, what is it that you look for when you get into a altcoin specifically?
Yeah, I would say there are two ways to do altcoins. One is to invest in the fundamentals, and the other is to trade the technicals. And I think both have value. I think there is value in investing in very promising blockchain startups, crypto startups, especially as it relates now to stable coins and infrastructure for stable coins. I think there's some really interesting stuff going on there, obviously, with Walmart and Amazon and MasterCard and Visa and all these companies get into the stablecoin game and the Genius Bill being passed and whatnot. So I think that that is a very interesting angle for investing in altcoins. That's one side of it. The other side of it is trading technicals. Now we're talking about, the meme coins. Now we're talking about the cryptos that just kind of absolutely pop off out of nowhere. I think you can use technicals to successfully trade those, but you got to get in and get out, and you got to keep those position sizes small. So I think there's two ways to do it. I think both have value, and honestly, why not do both? Like, don't limit yourself to just investing in good projects, because then you could miss out on. I mean, the reason we invest in cryptos, right, is to get those parabolic returns. So you could miss
Right.
out on those by just investing in the good projects, a lot of which are bigger and more stable. But then don't just trade cryptos on technicals because that's way too risky, right? That's like you could lose
Right.
your shit and everything on that. So why not do both? Why not do a little bit of trading on technicals and investing in fundamentals? We do the same in stocks, right? With our model portfolios on the stock side, we have services that focus on investing in fundamentals and others that focus on trading on technicals. And I think cryptos, same thing. Just really round out your game, if you will, right? Have full exposure to all different ways to make money in the market. Don't marry yourself to one way because why be one dimensional? It's a multidimensional world. Be a multidimensional person. So my 2 cents.
Of course, yeah. Two approaches, fundamentals and technicals.
Yep.
Okay. And Luke, gotta ask again, do you think there's anything we might have missed this week that we haven't talked about already?
Long episode this week. We're running on what, like an hour and a half right now. No, I
Hour and a
think
half.
I think we covered a lot of ground. I have nothing more to add. I really enjoyed the conversation. I think we covered a lot of really good topics this week.
Likewise. All right. Now, for everybody tuning in, please ask away, ask questions. We want to make this a conversation. We want to make this a community. But for today, that's been Being Exponential with Luke Lango. Hope you've enjoyed. We did. We'll see you all next week.